Hello students, today in this video we are going to solve the first simple problem related to conversion of partnership firm into limited company. This is the first problem. RNS are partners, their firm's balance sheet is given. These two partners decided to sell their firm to a company called V Limited. So V is a purchasing company. Apart from investment, remaining assets and liabilities are taken by the V Limited for rupees 1,44,000. This 1,44,000 is the purchase price paid by V Limited to the firm. Moreover, out of 1,44,000 rupees, rupees 1 lakh paid in the form of equity shares and the remaining balance paid in the form of cash, that is 44,000 rupees. Further, rupees 1,000 paid as a realization expenses. Cash at bank is not taken over by the purchasing company. Further, shares are distributed in profit and loss ratio, and profit and loss ratio of these two partners are equal as mentioned in the problem. And they ask you to pass the necessary journal entries. Now let's pass the necessary journal entries. As mentioned in the problem, purchase consideration is worth of rupees 1,44,000, which is paid in the form of equity shares of rupees 1 lakh and rupees 44,000 paid in the form of cash. In our last video, we have seen the journal entries. Very first entry is regarding transferring assets to realization account, and the entry is realization account debit to stock in hand, to debtors, to furnitures, to investment, to machinery. Narration is being transfer assets to realization account. Cash at bank is not taken here because in this problem, cash was not taken over by the purchasing company. If such information is given, then don't mention or don't transfer the asset which is not taken over by new company to realization account. So we excluded cash in this entry and the amounts are in front of you. In second entry, liabilities are transferred to realization account and only one liability is there. So the entry is sundry creditors account debit to realization account. Narration being transfer liability to realization account and amount is 50,000. Third entry is related to purchase consideration due. So the entry is purchasing company account debit to realization account. In this problem, purchasing company is V Limited. So V Limited account debit to realization account. Narration being purchase consideration due and the purchase consideration amount is 1,44,000. Fourth entry is related to receiving the purchase consideration amount and the entries, as we know that purchase consideration received in the form of equity shares and cash. So Equity shares in purchasing company account debit. So we should write equity shares in V Limited account debit, that is 1 lakh rupees. Purchase consideration paid in the form of cash. So cash account debit of rupees 44,000 to purchasing company account. It means to V Limited account 1,44,000. Narration: being received purchase consideration. As we know that investment is taken by the partners, so if asset is taken by the partner, then the entry is partners capital account debit to realization account. And as mentioned in the problem, that investment is distributed among the partners as per their profit and loss ratio, and their profit and loss ratio is equal. So investment worth rupees 20,000 is distributed among R and S equally. So the entry is R's capital account debit 10,000, S capital account debit 10,000 to realization account 20,000, being investment taken by partners. Sixth entry is related to realization expenses. When the realization expenses are paid, the entry will be realization account debit to cash account. Narration: being paid realization expenses, and the realization expenses as mentioned in the problem is of rupees 1,000. Seventh entry is regarding closing the realization account. After closing the realization account, credit balance appear, and that was profit. If the profit is there, then that profit is transferred to partners capital account as per their profit and loss sharing ratio. As we know that their profit and loss sharing ratio is equal, so the entry is realization account debit. The total profit appeared is rupees 43,000 rupees, that is distributed among partners equally. 21,500 goes to R's capital account and 21,500 goes to S capital account. Narration: being profit on realization account transferred to partners capital account. And these last two entries, entry number 8 and entry number 9, is related to settlement of partners capital account. It means that we have to close partners capital account. While closing the partners capital account, the entry past are partners capital account debit to equity shares in new company account. Next entry, partners capital account debit to cash account. And how these balances appear or written, that we'll see in our next video while doing the ledger posting of these journal entries. Thank you.